Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what we expect for next week. All right, starting off as always with the S&P 500. All right, we had quite the run-up over the last couple of weeks, touching on some resistance right here. It closed the week at 45.14. And quite a bit of resistance right around that point. If you follow this little green line right across, we can see the resistance that's built up there. Next level of resistance is going to be up around 4,600, and all-time highs here are going to be right around, a little north of 4,800. Would not be surprised at all to see the S&P reach all-time highs here in the next few months. We'll see, but there is quite a bit of resistance in between then and now. Remember, sometimes it takes a long time for the fundamentals to catch up with reality, and I think that's exactly what's happening here. Interesting gap up that happened during the week, and that's going to create a new level of support. So we may get a little double bottom action here, we'll see. But RSI and MACD are in the clouds. So, our bias is possibly up a tiny bit, but our bias is to the downside. The dollar is looking, so it's been falling out of the sky as well. Closed the week south of 104. And we do have some support coming up here along the 200-day moving average. Would kind of expect it to encounter some support right around the 200-day moving average, which is around 103.50. All right, moving on to your favorite metal and mine. Gold hit the 50 moving average, went through the 200, and then bounced right up off of that and closed the week at 1984, just knocking on the door of 2000, and haven't reached all-time highs yet, but I believe that's coming within the next few months. And I think we're going to blow through it. And when we do, we're going to be up to 25 or 3,000 in the next year or so. So another thing I wanted to go over here, instead of bringing up GDX and GDXJ just in the essence of time, but also to kind of illustrate a point, is I've been getting a lot of questions in the last couple of weeks. Why aren't we at an all-time high? What's going on? Now, keep in mind, we're only tracking this here in US dollar terms. Okay, so if you track this against different currencies, I've put the three touches where we've touched the all-time highs with the crisis that likely caused it. Okay, so the first one here is the COVID run up. Okay, we'd hit the all-time high at 2075 or 2078 or whatever the official number is. Then we basically went down and kind of sideways, and then we hit it again with the war premium, right, with the war in Ukraine. And then we came back down, had the back up the truck moment at 1615, ran up a little bit. Then we had the bank failures, and that was the other all-time high. And now we've kind of just been sideways since then. Now let's plot this gold in the euro. Okay, so we can see here the chart looks quite a bit different when you track it in a different currency. Okay, this is the COVID crisis. And then it went down, and look, we have a new all-time high in the euro to gold, and that came with the war premium. And then up over here is the banking crisis, right? So they had an all-time high in gold, and it came with the war premium. Now let's go to the Japanese yen. This chart looks significantly different. Okay, look at what this has been doing. Not sure why it only goes out to 2006 with this, but you get the point. Look at this gold chart for the Japanese yen. These guys are just hitting all-time highs, like seems like every week, right? Then we'll go to, this is the Indian rupee, okay? So look at this gold chart. Looks completely different when you track it against a different currency. So here's the COVID crisis. Then we get a new all-time high with a war premium. And then the banking crisis, it's another all-time high. This is for the British pound, okay? So here we have the COVID crisis. Then here we have the war premium hit right along the same point. Then the banking crisis was worse for them, and they hit an all-time high. All right, now we're going to look at the Swiss franc, and I simply pulled this one up because I wanted to see what happened when Credit Suisse failed. I thought that would be really bad for the Swiss franc, but I guess I was wrong. Here's the COVID high. Here's the war premium, okay? New all-time high for them for the war premium. Now here's the Credit Suisse failure, and it actually went lower than the war premium, which I thought was pretty interesting. But anyways, my whole point with these was, don't get too caught up on all-time highs. It just depends on what currency you're trading in, whether, that economy thinks that this is a really big deal or not. And, got a question from Prakish. He says, quite frustrated with gold miners and curious what the spot price of gold needs to do so miners can recover to new highs. Prakish, I think we need to see sustained above 2100 gold. And, when people become concerned about the purchasing power of their currency, they run into safe haven assets, they run into real things, and they run into gold and silver. And then after that, they leverage that with the miners. So when the money managers stop selling these things and start buying, these are going to take off like a rocket. For the record, we tend to be way, way, way early on our investments, like we've been with gold. But it's coming. Be patient. It'll be here. Okay, moving on to silver. This is pretty interesting. So we had this Fibonacci that hit last week. That was a tick if you could catch it at 22. Shot up, closed the week at 23.85. And now we got a bearish reversal bar coming down. A little bit of support right here along the 150 moving average. We have the 200 moving average right around $23.40. Kind of hope that holds. But I think, a lot of resistance is right around $24, $24.50, something like that. It's getting pretty high on the RSI, kind of high on the MACD. With this reversal bar on Friday, would expect it to settle back down. Might find a little entry point here around 2340 or so, right around the 200 moving average. What we could do is we could draw another Fibonacci here and see where that hits. And a retracement here would put it, 2310 and 2284. So those would be the levels that we're looking at. I kind of expect silver to roll over and correct back down to do a little bit of consolidation. The way that we played this, this last run up was on PSLV. So you guys remember, placed this bet over here, sold here, had a nice little 10 or 12% profit or whatever that was, bought again down here, bought again down here, and then we just recently sold on Thursday this position over here. What we could have done was we could have bought down here again and then sold everything up here. That would have made for a nicer profit. The way we decided to play it again was we thought we'd be leveraging it more on the junior silver miners. So we bought these down here, anticipation of selling it over here. But what we find is that if we plot this move right here in the junior silver miners ETF, over 38 days, it went up. I mean, if you caught the point to point, it went up, 11, 12%. But then if you go over here to the physical metal and we plot the same thing, it went up even more. So maybe this is the one that we should have played, because this one went up 15% when the other one only went up 11. Not really sure why the physical metal outperformed the miners. I think maybe some hedge funds are just selling some of these junior miners, which is creating more pressure. But anyways, this is the way we played it. Silver's probably going to turn down, may create another buy point for SILJ. But RSI is a little middle of the road, MACD, kind of the same thing. Don't really see any entry points into here. If anything, we think it's going down. All right, moving on to bonds. This is interesting. We called that the Fed was going to, they were done hiking rates on their last rate hike around, I think it was about a month or so after their last 25 basis point hike. And finally, the market traders agree with us. 100% of traders here, according to the CME Fed Watch Tool, believe that the Fed is done hiking rates. They don't think that for their next meeting in December they're going to cut. They don't think that they're going to hike. They think they're going to hold it there. On the record, we think that they are done, and we'll see how that irons out. So we played this on TLT. We haven't put the arrows in yet, but we basically bought here, 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 and then we sold half our position here, feeling pretty smart for the better part of a week or two. And then now it started to go back up right at the point where we halved our position. So we'll see how this goes. There's arguments on both sides. I'm beginning to think I don't understand this, and I should probably just close my position if we have a little run up here. But yields are starting to come down, which is driving TLT up. We'll see how this works out. All right, moving on to copper. Copper closed the week slightly up at $3 and we'll call it 74 cents. And not really seeing any technical entry points here other than maybe this 20 is going to cross through the 50. RSI and MACD are not really entry points here. COPX, the copper miners ETF, we made a purchase here a couple weeks ago. I guess that was a tick if you could catch it down around 31.50. But don't see any technical entries here. You know, if we have a recession, this is going to get washed out. I mean, what would really be nice is if we had a washout in this like we did in the COVID crisis, because we know copper's not going anywhere. I mean, we could get this stuff for pennies on the dollar. But I watched an interview recently where the guy was basically saying, I can't remember his name at the moment, but he thought that the recession's already priced into copper and this might be as cheap as we're going to get it. So if you're going to play a beta play in copper, COPX, I think is a great way to do it. You know, you just capture all the big names and ride this one out. Leveraging that even more on Arizona Metals. These are our entry points here, getting pretty cheap. As far as a technical entry, I don't really see one other than this is a point where we do have some resistance on the technical charts going back quite a ways. But would like to see a little bounce here, maybe around $1.50, maybe a limit order there at $1.50 and see if it fills. But yeah, would like to kind of see a double bottom here if you're looking for a technical entry into this. In these, when you have a market cap of 186 million US, remember limit orders only. Our basic rule is if it's if the company's worth less than 400 million, don't do market orders. Do limit orders because you could lose your shorts. All right, moving on to everyone's favorite commodity right now, uranium. This one says that it closed the week, the spot price at 78.20. I went on with John Quakes and he said it was $79. That's the one we're going with. This thing has shot up. Unbelievable, amazing, and I think we have a long way to go. The Sprott Physical Uranium Trust continuing to make all-time highs. And if we go to the Sprott Physical Uranium Trust website, we can see that they're trading at a slight discount. Not much, but check this number out. We have added 400,000 pounds of U3O8 taken off the market. And if we scroll down to the bottom here, you can see that we got slight above discount to NAV. I'm sorry, premium to NAV. So they purchased. And in the last couple of weeks, the last time we brought this up, it was at 62.2 million pounds. They purchased another 300,000 pounds and then another 100,000 pounds, bringing up 400,000 pounds just in the last few weeks, taking it off the market, unavailable to Edison and Westinghouse. Love this bet a lot. We're not getting the radical premium to, discounts to NAV that we were seeing before when it was 16 or 18% discount. But yeah, stronghold. Keep we're not selling anything yet. I think our next target is going to be around $100 a pound. We have Justin Hune coming on in the next week and a half, and so we'll pick his brain on that. Got a question from Melvin about Cameco. Is it overvalued? I'm going to defer to Peter Granich on this when we talked to him right around here, and he said that he thought it was still a strong hold. Which does not mean a buy, but we're going to have to see some type of technical, entry here, which we don't. This was our purchase here. We sold way too early. We bought when they acquired Westinghouse, and we sold right over here when RSI and MACD told us to do so. But the fundamentals just won out on that. I guess this was a tick if you could catch it down here. But if you're going to make an entry into this, I would wait for some type of technical entry point, which it looks like, you know, the 50 moving average here might be an entry point to do it. But, you know, if you're buying here, you're just chasing green candles. So, you know, I would personally wait for an entry point when it came back down, but that's just us. Kazatomprom performing like a boss. We had a heck of a run up here. This company pays amazing dividends. We got into this when we went through the Rick Rule Uranium boot camp, and the dividends alone paid for that boot camp about a dozen times, and they just keep on paying. And yeah, liking this one a lot. You know, we're not selling. I suppose there is some political risk with this, so you run the risk of government saying that you can't have it. But I don't see any technical entries into this. You know, RSI, MACD's kind of middle of the road. Maybe if you wait until it hits the 50 moving average, that might be something. I really don't see anything as far as a technical entry here. Moving on to URA. Got some questions on this. Basically, I think anything kind of around this white trend line up, although we're starting to float in the clouds here, it is coming up on some resistance. So you can see back here in April of last year, we hit this level. And then of September of 21, we hit this level. At least as far as the semi-recent all-time highs are going to be, what is that, 3150, we'll call it. So is knocking on the door for some resistance, but I think the fundamentals are just winning out on this bet, hands down. So if you're looking for an entry point, I would wait for this to come back down to the 50 moving average, which it probably will. And that might be your entry point there. Kind of the same thing for URNM. I mean, this little, I drew the white line in here as the resistance. So it's knocking on the door of quite a bit of resistance. We have the all-time highs up here around 5150. And, you know, don't see any technical entries into this. If anything, I would expect it to kind of go down. But, you know, maybe the same kind of thing, kind of anywhere it approaches this 50 moving average on pullbacks might be an entry point. But nothing technical is telling me that this is an entry point. RSI is in the cloud, so MACD's getting up there. You know, I don't see it. Okay, UROY, our favorite uranium royalty company, and not only that, the only one, got a cup and handle forming right here. And what we learned from Jordan is when this end of the cup is higher than this end, it's even more bullish. But nice little cup and handle here. It looks like it's starting to iron out here to go up. We have a limit order down here at $2.50. That's probably a pipe dream at this point. Would love to see it come down there and have it hit, but we're comfortable with our position in this company. If you don't have anything in this, I think this could be one of the alpha plays, maybe even one of the safer ones. You know, yeah, I just don't really see a technical entry into this. I mean, other than the cup and handle formation, but maybe some limit orders down here around like $2.70 or something might be a nice entry point. We'll see how this handle forms out, but the fundamentals are just screaming in uranium. Okay, moving on to natural gas. Devon Energy, we learned about this one from Rick Rule. They pay awesome dividends. Like this company a lot. So these are 3 entry points. Kind of looking for a fourth here. We could draw in a retracement and see what this looks like. So it blew through the retracement. So that kind of makes this go out of the window. You know, not really looking for anything there. I think what we'd have to do now is kind of focus on a double bottom. So I guess this was the tick if you could catch it. Hopefully it'll correct back down here to our last entry point around 4250 or so. That might be an interesting entry point into Devon. And this is just one of those, goes into the dividend portfolio, collect the dividends. Equitable, this is another one that Rick Rule mentioned. We did not get into this, probably should have, but it looks like we're going to get another setup here. So if I just put in a horizontal trend line right here, you can see that there is quite a bit of support going back right around this level here, which is $38.60 or so. A limit order around there might be nice. Looking a little bullish here with with the 150 crossing above the 400. This purple line down here is the 200 moving average. So I think that might be kind of a stink bid, which lines up nicely with this little gap up right here. So that might be a neat limit orders around 38 bucks, something like that. You could do a limit order for 38 bucks. If it hits, then immediately put in a stop limit order just a little bit below that, so that you know, you don't lose your shorts. But MACD's getting down in the toilet. RSI is about a middle of the road, so I'm not really seeing an entry point into this, although this is going into the dividend portfolio. I suppose it doesn't matter too much, but you'll notice with these things, usually when the dividend pays, it drops because they got to pay it, you know. So we had a little point like that. I mean, it went way up here from 44 all the way down to 39 when they paid the dividend, and now it's probably going to start ticking back up. All right, got two questions on UNG for natural gas from Clifton and Josh, and you know, basically asking if this is a pure play way to play natural gas. Let me just back up the chart here. We're going to go to the weekly. And so this is the life of it right here. It started out, you know, around $1,800 a share, and now we're at $6.16. So I looked this up. I think we talked about this on the show maybe 6 months ago. You know, the management expense is kind of high. I think this is more of a fund for a trader than it is for, you know, a buy and hold. I mean, a buy and hold on this, you just got absolutely murdered. They pay no dividends, you know, but there are some trading opportunities. I mean, like, let's take a look. Let's see if you were to catch this tick. That's a 140% move. If you held on to up here, that's a 250% move, and that's just in a couple of years. I mean, that's nothing to shake a stick at. And this does look like it's ironing out for a technical entry. MACD is starting to come up. RSI is kind of having a gradual come up right there. Haven't had a reversal bar to the upside yet, but if you're a trader, this might be an interesting fund to do. So I personally am not going to get this one. The depreciation over time will absolutely kill you. But if you know something about natural gas that makes you think it's going to go up in the very short term, kind of an interesting point right there. All right, and Johan, I believe I'm pronouncing your name right, wants to know about, let's go back to the daily here. There we go. Wants to know about MCF Energy. So this is European natural gas. Now, really small market cap here. Let me go to the, oops, where'd the fundamentals go? There. Why isn't it coming up? Well, anyways, I think it's basically worth like add text. I'm not sure why it's not coming up. Well, whatever. Anyways, it's a very small market cap. If I remember right, I think it's like 40 million or something. So limit orders only. You're not going to be able to, you may not be able to buy it. You know what I'm saying? Like in order for you to buy this, someone else has to be willing to sell it. And, you know, if your price points don't match, no sale. Okay. So, you know, on some days there's no volume, you know, like that day right there, no buyers, no sellers. But it is kind of looking interesting here for an entry point, because see, like there is a lot of support here over the last like 6 or 8 months, right around this level of where it is now, around 22 cents, 22.5 cents. So you could put in a limit order around where it is now. MACD is a little low, RSI is kind of low, you know, and then put a sell maybe around 21, because if it breaks that, then, you know, I mean, it could go, look at what it did over here, right? But yeah, kind of an interesting point. The thing about trading this one is, like I said, there may be no sellers. And look at this gap right here. I mean, in one day, it went from 19 cents all the way up to 34. And then by the end of the day, it closed around 44. So if you put your stop and then your sell limit, you know, let's say you did it, you're like, oh, okay, if it gets down to 21 and a half, I was wrong. So that's where you put your limit at 21 and a half, and then you put your stop at 21. Well, if it just blows through that, you're SOL and it's gone, right? You now have it, and you just eat a 50% loss or whatever it's going to do. So be very careful when you're trading these small market caps. But you know, if you know something about this company and you think that European natural gas is going to do well, might be a play. I don't know. This might be a question for Rick. All right, and Topper wants to know about Tellurian, and he says it's at its low. And if we back up, we can see that you know, he's onto something here. Okay, so this is the life of the stock from 1973, and then all the way to now. Kind of in the toilet. Okay, we do have quite a bit of resistance right around where it's at now, around 53, 54 cents. And this is a little compelling. The one thing that worries me is see this just wick going down. Now this is on the monthly chart. So if we bring this up on the daily, we can see that it traded below that quite a bit for quite a few days, for a few weeks. Buyer beware. I think this might be kind of an interesting one where you basically buy it around where it is now, or maybe a limit order for 50 cents, and then a stop below that of like, I don't know, 48, because if it blows through that, all bets are off. It could go all the way down here and you could lose your shorts. I mean, that is just an impressive move to the downside. So let's see what that is. What is that, 70%, 60, something like that? Just a massive move to the downside. Yeah, this is intriguing, actually. We might do a trade on this one, is basically put in a limit order around where it is now, maybe around 50 cents. And then if it gets down to 48, 47, we were wrong. And there's nothing really to hold it until you get down to like 20 cents. I don't want to ride that. Just take a couple percent loss if you're wrong and write it up if you were right. Does that make sense? Okay, moving on to oil. What in the heck? Oh, there we go. Okay, crude oil. Had a long conversation with Daniel about this one on Thursday. We were talking right at this point. We said, okay, crude just hit $73 a barrel. What does this mean? And looking at the bar there going down, we both decided that, you know, this could get stupid cheap. We might get back into the range of like 67 again. Remember, this was the tick where it got down to 63. That's just an auto buy right there. But, you know, could get down lower than that. We're looking at the RSI. Probably should have just pulled the trigger. I mean, MACD was in the toilet. RSI was in the toilet. Anyways, we didn't. And it, of course, it shot up and closed the week at $76 a barrel. So the way we could leverage that, we could do it with XLE, your favorite oil ETF, and ours. You know, we could have placed a bet on that. You know, now that we've established that kind of double bottom right here, I think a limit order around 82.50 isn't a terrible deal. And, you know, you could play it on that one, collect your dividends. The ones we're liking a lot right now are Exxon. And, you know, you could, I'd like to see a double bottom in this, back down here again around like 101. Would like to get more Exxon. We're just slowly adding to our position on this, but we want to do it at technical entry points. And right now, the major support we got is the 400 moving average. But RSI is bottom of the pack. MACD is pretty low. Not a whole lot of volume, but looking pretty interesting. It looks like this is oil is probably going to be on the move up from here. Blackstone Minerals, we talked about this one a lot. We've been in this for a while, and I can tell you guys that they have amazing dividends, and we're basically just keep adding to our position on pullbacks. This is probably going to be in our retirement portfolio forever, or at least as long as we're alive, because they're paying like 11 or 12%. I mean, it's just incredible. We had two limit orders from a couple weeks ago. They both hit. I think this one was at 17, and then this one was at 1690. Oh, here it is. I wrote it down. 1692. It was what we got it at. And then we have one more for 1655, which is essentially we're just trying to line up with this 200 moving average. We have no sell orders on this. Even if it washes out, we'll simply add more. They pay awesome dividends. I mean, this company is really incredible. I mean, look at that, like a $17 share price, and it's almost 50 cents a share. Just absolute boss. Love it. Okay, Tourmaline. All right, we brought up the wrong chart last week. That was a little embarrassing. Thank you, Prigler, and everyone that let us know. This is the chart you want to be looking at. it is coming up onto a kind of an interesting buy point. We have this upward channel trend line that's been established since March of this year. And basically, if you bought anywhere where it touched this white line, you're doing pretty well. And look at where we are now. This one also pays amazing dividends. So if anyone's got this company, would love to hear from you. Yeah, it's kind of a compelling entry point. I mean, look at RSI down here. It's at like 30, well, 33, but pretty much 30 is a buy. Down here, MACD is pretty low. Volume selling. The 150 just turned above the 200. Not a golden cross, but we'll take it. You know, maybe even a limit order down here at 65 to create a true double bottom right there. Maybe it blows through this trend line and hits the 200 moving average around 63. We might be picking up pennies in front of a steamroller here, but I don't know, kind of impressive here. Okay, so this is on the TSX. If you guys are Americans or anywhere else, you probably want to buy over the counter. This is the ticker for that, TRMLF, basically the same chart, but you know, same kind of thing. Anywhere along this trend line looks pretty enticing. All right, and then Clifton wants to know on wheat. This is also looking kind of interesting. Okay, I'm going to back up here. And so this is a way that you can kind of trade wheat. And we were looking at this one back in 2022 when Daniel and I were frantically trying to figure out what to buy when Russia invaded Ukraine. And we basically looked up what are Ukraine's main exports, and one of them was wheat. It was like 25% of the planet's wheat comes from Ukraine, or at least it did before the war. And this was the fund that we decided on. We looked at it right around here, and for whatever reason, we didn't pull the trigger, and we missed a I don't know, what is that, a 150% move or something ridiculous. I mean, it was just incredible, and it all happened within like oh, I'm sorry, not that high, 60% move. It all happened, you know, within like 2 weeks. So for whatever reason, we didn't pull the trigger. We missed it. But if you know something about the wheat market that is ironing out right now, RSI is not terrible. It's at, what is that, 37, 38. MACD is below the white line. Would like to see it a little bit lower, but it does have a pretty compelling double bottom right here. And we have a reversal bar on the daily. So I don't know, if you know something about wheat, might not be a bad deal. You could put in an order about where it's at now, and then maybe a sell order at like $5.50 and see if, you know, if that hits, then you're out for pretty cheap, and you know, rinse and repeat, try to find the next one. So hope that helps, Clifton. I saw you submitted some other companies. Go ahead and pick your top 2 for next week, and we'll go over them there. But in the effort of time and to get this out, we're going to stop here. I hope you guys have a great rest of the day. We're going to have Chris Vermeulen. We're going to have Justin Hune on the show and Greg Manarino coming up in the next week or so. We don't have a guest for next week, so we're thinking about maybe taking one commodity and diving into companies from that. Nolan suggested coal. We believe that coal is probably going to do pretty well. It seems to continue to do so. So if you guys want to see that one, put it down in the show notes what you want to see for this week's commodity review. And whoever gets the most thumbs up and you know, submissions, then we will go with that one. You have yourself a great rest of the day. Support the show, hit the like and subscribe, and we will talk to you next time.